Hey YouTube, Untamed here. So according to Bank of America, roughly 30% of all American households are living paycheck to paycheck right now. Nearly 30%, nearly a third of all Americans are living paycheck to paycheck. And well, that kind of coincides with auto loan payments. Right now, within the US, there are over 101 million auto loans out. And there's about 339 million people within the US. So again, about 1 out of 3 individuals within the US has an auto loan, which is why it should not come as too much of a surprise that we saw nearly a 25% uptick in the number of repossessions take place between now and this time last year. Nearly a 25% uptick, which is absolutely insane. In today's video, I'm really going to peel back the layers of the onion and provide you with new stats, facts, and figures that paint a clear picture of where we're heading later this year within the car market, new and used. And then I'll wrap up the video with when do I recommend buying if you have an opportunity to. If you're in a comfortable position, when should you buy this year? So stick with me. So we talked about it before, but I think it's important to open up this video with this stat. The average monthly payment for an auto loan right now is just over $760 for a new vehicle purchase. It is currently $525 for a used vehicle purchase. Kind of insane. The average new vehicle purchase price across the board, cars, trucks, SUVs, you name it, is $48,405. That is up nearly $12,000 over the last 11 years. Which is absolutely absurd when you think about it, right? The average new truck sale price throughout 2024, $64,261. Those are the figures that we're working with. So it's really not too much of a shock that people are struggling to make these astronomical payments. People who purchased a new truck in 2024, over half of those auto loans that people have taken out on trucks are over $1,000 per month. Kind of wild. When you combine that with the astronomical interest rates right now, 7% being the national average for a new vehicle purchase and 11% being the national average for a used vehicle purchase, again, it starts to be a compounding issue. We are now seeing the highest level of auto loan delinquencies, 30-day, 60-day, and 90-day delinquencies, the highest level since the 08-09 recession. Let that sink in. And then you add on the fact that insurance has over doubled nationwide over the last 2.5 years. In some states, it's even a larger compounding rate. Some states we are seeing that 55 to 60% year-over-year growth for your auto insurance premiums. The national average right now for a household is just under $2,700 for full coverage insurance. Absolutely insane. Again, over double over the last 2.5 years. 25% of people with an auto loan out right now owe more than what their vehicle is currently worth. So 1 out of 4 individuals have negative equity. The national average for negative equity is just over $7,200. 1 out of 4 of those individuals with negative equity owe more than $10,000 more than what the vehicle is currently worth right now. Absolutely insane. So where does that leave us? That leaves us with a huge population within the US feeling stuck. They feel as though they can't trade in their vehicle. They can't get rid of it because when you combine that with the terrible trade-in rates right now on vehicles, values have plummeted, even more so on used vehicles comparatively to new. When they're slashing the prices of a new vehicle $10,000 to $15,000 off of MSRP, what do you think that does to a used example of that same vehicle? That's going down even more so. It needs to go down more so, especially with those higher interest rates that you get hit with on a used vehicle purchase. And when people feel stuck, that's when they stop making payments, right? Especially when you combine that with all the other payments that you have to make ends meet day to day, whether it's for your house, paying rent, mortgage, right? Homeowners insurance has gone through the roof, along with auto insurance too. The cost of living in general, cost of groceries, through the roof, everything has. So when you start looking at how much you owe in a vehicle and you're like, wow, I owe $10,000 more than what the vehicle is even currently worth, and that value is only going to go down as we move forward, people lose hope. They begin to lose hope and they lose faith, and that's why that tends to be the first thing that they cut loose. They stop making those payments. If it helps them with their other bills, they'll cut that one loose and allow the repo man to come pick up that vehicle and retrieve it for the bank. That ultimately becomes a compounding issue. Banks begin to clamp down even more so because people are failing to make these payments. Ultimately, everybody suffers when we begin to see an uptick in the repossession rates, which is why we saw 1 out of 5 auto loans that were applied for throughout the last 4 to 5 months being denied by banking institutions across the nation. They are clamping down. They're not just handing loans out like candy anymore. They're doing a more thorough, more in-depth background check on all their people applying for loans. They're getting reference checks to make sure that you are going to be the right person to offer that loan to. They're gonna triple check your income, your DTI, your debt to income. They're definitely clamping down because they don't want to find themselves in an even stickier position as we move forward in 2025, with values continuously coming down even more. It may come as no surprise to you, but 1 out of 7 families, 1 out of 7 households within the US cannot afford to have 2 auto loan payments out at the same time that are $500 or more. So a collective of $1,000 in auto loan payments, 1 out of 7 families cannot justify it. Because what are we living in? We're living in a TikTok world, right? We're living in a social media world where not only are we trying to keep up with our neighbors, we're trying to keep up with people that we see online. Well, if they can do it and they're my age or younger, I should be able to buy that vehicle too. I should be able to buy that Mercedes-Benz G63 AMG. I should be able to do that too. They're 20 years old. Why can't I do it? So people begin to feel that way. And really, I mean, it's a recipe for disaster, right? People get themselves in over their head. They can't keep up with this huge payments that they have every single month, right? The whole keeping up with the Joneses thing has become such a problem for Americans. But because banks are clamping down and people are struggling so badly right now, we are seeing an astronomical uptick in the vehicle inventories across the US right now, whether it's new and used, huge upticks, over 120% growth rate in new vehicle inventory over the last 2.5 years. We now have just over 3 million brand new vehicles available within the US, and we have 2.25 roughly million used vehicles available within the US. Huge growth rates and certainly unprecedented. People are choosing to keep a hold of their vehicles longer. Not only do they feel like they kind of have to with the prices of things getting out of hand, but they're starting to realize that, hey, if I just do that necessary maintenance or provide that necessary service to my current vehicle and keep it longer than 3 years, maybe 5 years or 7 years or even 10, heaven forbid, they're able to get a lot more juice out of that vehicle and save themselves a ton of money over the long haul. And therein lies the problem for dealerships. Not only do we have people holding onto their vehicles longer now, we also have banks denying auto loans for people actually trying to go out and buy them. So that only adds to the compounding growth rate of inventory across the board for dealerships across the US. They're actually getting to the point where they're, no kidding, turning away allocations. They're turning away deliveries of vehicles, especially the vehicles that they have so many of existing on their lot. Every single month, that dealership is paying a flooring cost, is what they call it. That small interest rate, kind of like what we find on a credit card, a small interest rate per vehicle to sit there on their lot per month. Obviously, it's not a huge amount, but when you have 400 unsold vehicles sitting, chilling on your lot for months on end, sometimes years plus, that becomes a huge pain point for those dealerships, ultimately leading them to shut their doors. Just for context, I don't talk about this too much, but currently there's an 84-day inventory supply across the US. That's the average, 84 days. A healthy market is considered 60 days, having 60 days worth of inventory. Again, for more context, during the pandemic, 5 to 7 days was the national average. So, meaning a vehicle would show up at a dealership lot, it would stay there on average for about 5 to 7 days before someone came to buy it. And oftentimes, really, so many vehicles, especially if they're desirable at all during the pandemic, they were pre-sold before they even reached the dealership. And oftentimes, they came with a greedy dealership markup where they really took advantage of the consumer. And that really adds to our problem at large. We have a bunch of people that overpaid for their vehicles throughout the last 3 to 5 years, and now they're hugely upside down on it, and they're really up a creek. Well, a lot of Americans like to go buy a $7 cup of coffee in the morning, so it really is no shock that the average credit card debt by an average American is $7,300. That actually went up just a little bit over this last month. So people are living paycheck to paycheck, and they're living off that credit card. Again, a recipe for disaster. The proof is in the pudding, and the writing truly is on the wall. Here, especially throughout 2025, things are going to get a little bit worse before they get better. That's my honest thoughts on it, guys. So if you are in a position to hold off, maybe until May to August timeframe, that's when I personally believe you'll be able to get the best deal on a new vehicle or used vehicle purchase. That's kind of the frozen middle portion of the year. Tax season's over at that point, so people aren't throwing their tax returns at a new vehicle purchase as a down deposit or down payment, and it's not at the end of the year where we would likely see the end of year savings, which are often gimmicky, but those are when people will tend to flock out to dealerships because they personally believe they're going to get the best deal. But if everybody's doing that, you're likely not going to get the best deal. And during that May to August timeframe, families are going out on vacations, their kids are fresh out of school. That is when people are not truly buying a new vehicle because they want to spend their money on that vacation instead. So that's your opportunity to pounce, in my personal opinion. So it is certainly a buyer's market. Do not let a dealership trick you into thinking that if you don't buy that vehicle that day, that you won't be getting it anywhere else. Wrong. You can go up the road, and I guarantee it, even on desirable trim vehicles now, you can go up the road and find that same exact vehicle and likely find a dealership willing to play ball with you and offer a better discount. So don't succumb to their greedy tactics right now. dealerships across the US right now are struggling bad, largely due to how they treated customers throughout the pandemic, really throughout the last 3 to 5 years, right? They took advantage of people. The whole supply constraints really served to their benefit, and they like to milk you with a $5,000 or a $10,000 markup over that MSRP. And I guarantee it, those people who fell victim to that, they are not going to go back to that dealership now. So although they lined their pockets at the time with $5,000 to $10,000 ADM, additional dealer markup, they're now paying the price for it. That customer will not be a returning customer unless they're completely dumb. They're not going to go back to that dealership because now they're looking at how much they owe on that vehicle. They're likely upside down on it. They're like, I'm not going to go back to that dealership. They took advantage of me totally during the pandemic. I would never go back to them. So was it worth it? 5 to 10 grand at the time to never have that as a returning customer? I don't think so. One thing that I found quite frustrating throughout the last few years is the entire auction or wholesale market. Dealers would use the wholesale market as their get out of jail free card. They would rather sell off a vehicle, wholesale it through the auction, rather than actually selling it to you, an individual, an actual person, buying it from them, their brick and mortar establishment. They would rather wholesale it if it meant making $1,000 more, right? And the wholesale market at large really hindered the entire market for folks. They wanted to come out, they wanted to get a good deal on a vehicle, but nope, the auction market was a little bit higher, so they would kick it off to wholesale it. And I definitely did not like that. But now the wholesale market is not proving to their benefit. We have seen a 20% decline in that wholesale market, just under a 20% decline over the last 9 months. So they can no longer just flick their inventory and auction it off if nobody buys it. So now they're stuck with it. It's on their dealership lot, and unless they want to take a huge loss on it, they can't just flick it off to the auction. And I'm personally pretty happy about that. Because heaven forbid, they actually give a great discount or a great deal to us, the consumer. Heaven forbid, right? You know, like many of you, I love cars. I love cars, trucks, SUVs. I have a thing for Toyotas and Lexus, Ford F-150 Raptors. I love nice vehicles. And honestly, that's kind of served to my detriment, right? I mean, whenever I do have a very nice vehicle, I don't always buy them outright. So I am often plagued and hindered and weighed down by an auto loan. It's only when I own my vehicles outright, oftentimes much cheaper than the Raptor and whatnot, and when I own them outright, I feel so much better. Because it truly is the wealth killer. When you're constantly paying a monthly payment, a large monthly payment with a large interest rate on it, it just wears you out and wears you down and constantly beats at you on a depreciating asset at the end of the day. It really should come as no shock that the top 2 vehicles driven by the wealthiest 1% of Americans is Toyota. Toyota Land Cruisers in particular are pretty popular amongst them, at least previous gen Land Cruisers, and Honda. Toyota and Honda. So they're definitely not the showboaty type. Although they can go out and buy the Rolls Royce, they often go to reliability, simplicity, and affordability. All right, guys, I'll wrap up the video there. As always, I sincerely appreciate you taking the time to tune into these videos. If you found any value in it whatsoever, I do respectfully request that you please consider liking and subscribing. Your support means a lot, and it certainly doesn't go unnoticed. Until next time.